So welcome all to the knowledge sharing session organized by FIAX in association with MicroSave Consulting uh, on various fintech and financial inclusion topic with the participation from the industry experts and the startup founders. We saw a great policy advocacy discussion happening in our earlier roundtables, which was on ubiquitous lending and on insurance for all. Today, our topic of the roundtable discussion is building wealth for Bharat and offering wealth management services to someone who has an income of around $300 or that is 2,500 rupees, 25,000 rupees is something which is unheard. So I have never seen walking into a bank and going and speaking to a relationship manager that I have an income of $25,000 and I want a wealth management services. I don't think any of the banks will ever look at such customers. But if the same customer, if some other one comes in and says that I have $100,000 as a disposable income, you will have financial institutions running behind a wealth manager coming to offer the wealth management services, and there are several products in the industry as well. Now, we think that the people who have $300 as an income, they are hand to mouth, and and there is a perception that these people do not need a wealth management services, and that's where the problem is. And also, the financial institution think that these customers are not a big revenue contributors to the financial institution, and hence they are not rolling out the products in the market. We saw what happened in the payment space as well as lending space. Banks never offered the product for a small ticket transactions. Like never there was a product which could transfer, say, 10 rupees or 50 rupees. Or we never saw a roadside vendor getting some kind of lending support from the big institutions. And you saw how the fintech and the startups came in and disrupted that market and showed the change to the entire industry, and it led to creation of a lot of jobs around that. So I believe that a similar thing is waiting to happen in the wealth tech space as well. And we have a very very good panel today, and I'm sure they will share their insights on how this market can be tapped with the wealth management product. So with this, let me introduce our panelists today. We have Mr. Ashish Somaiya, who has 2 decades of rich experience in leading the asset management companies. He is the CEO of White Oak Capital Asset Management Company. Prior to this, he was the CEO and Managing Director of Motilal Oswal AMC for almost 8 years. He was in a leadership position with ICICI Prudential AMC, Bharti AXA Investment Wealth Manager, and several leading brands. Welcome, Ashish, to this roundtable discussion. We have second panelist, Mr. Vishwanath Divya. He comes with a rich 17 plus years of experience in the BFSI sector. He has served, in the insurance companies. He has served in the microfinance companies. Vishwanath is currently with the India Post Payment Bank, heading the marketing. He was with India First as a business head, micro insurance and rural business. He was with Apollo Munich Health Insurance, HDFC Ergo, IDBI, Federal Life Insurance, and SKS Microfinance, and several other institutions. Welcome, Vishwanath, to this knowledge sharing session. Our third panelist is Jaideep Narayan Banerjee, who's a co-founder of an innovative fintech company, Dwara Smart Gold, that aims to transform the way India consumes gold. The organization is simple, but yet has a very powerful vision to serve the unserved and unbanked population in India through an asset class which they know and they love. He comes with a rich experience of more than 30 years in retail, insurance, and manufacturing sector in India and overseas market. He's an author and poet and avid cyclist. So welcome, Jaideep, for this knowledge sharing session. We look forward to learning from you how the wealth can be created for this sector of the society. We have Paddy Raghavan, who is a co-founder of Multiple. He is a serial entrepreneur. He formed Compute.io, which was acquired by Cisco, and he was free-founded 8K Miles. He was with EMC and General Capital and other brands. Multiple, the company that he's currently running, while the entire world is talking about BNPL, he's talking about SNBL. So save now, buy later. The platform that helps consumers to save for their upcoming big ticket spend, like vacation, travel, anniversary, jewelry, or furnishing insurance. So interesting concept. The Multiple is a robo advisory platform built by the SEBI qualified investment advisor to make the most suitable recommendation for the user based on the multiple parameters. Welcome, Paddy, for this session. Today, our moderator is Nishant. Nishant is a soft-spoken guy, and I'm sure he will give a lot of time for panelists to share their thoughts. Nishant is leading the Financial Inclusion Lab in MSc. And he supports the startup working with a low and moderate income segment. Nishant also co-founded Laksha. Laksha is a fintech that provides financial life cycle needs of unserved, specifically around micro-saving and insurance. Nishant has worked by multiple countries in Asia and Africa with the large banks and telco to drive financial inclusion. With this brief introduction, Nishant, I request you to take over and help us understand how can we serve the LMI segment through this great panel that we have today. Over to you, Nishant.
Thanks, Vikas. Thanks for that perfect context setting and the introduction of the panelist. I hope my voice is clear and audible. Okay, perfect. So welcome all the panelists and welcome all the audience members who are listening to this third roundtable on building financial wealth for the Bharat segment. And I would also like to thank our sponsor, JP Morgan Chase Foundation, with whose support we are able to organize such events and continue to do so in the future. So, building financial wealth for the Bharat segment is one of the frontiers where I have personally seen many fintechs struggle and many fintechs fade away into oblivion trying to solve for this complex issue. And this is despite the fact that we have been able to create, at least in India, we have been able to create a digital rail in the form of Jam Trinity, in the form of other India Stack platforms over the last 1 decade. We have almost 80 to 90% of penetration in terms of access to the bank accounts. But if you look into the data deeper, only 55 to 60% are active or regularly used. And even in those 55%, 60% of active or regular use cases, the use cases are very minimal. It's the normal transactions from the savings bank account and the likes. And this gives an impression that somehow we have not been able to build the use cases which will attract the LMI segment to use this digital rail and build a financial wealth for themselves. But having said that, and this has multiple issues. On the supply side, it is very difficult to build the trust digitally. It's very difficult to build the innovations on the channel side, and the products are fairly highly regulated in India on the savings and investment front, which pose its own challenges in terms of innovation, which we see a lot on the insurance and credit front. And that's why when we talk about fintechs, when we talk about cherry picking the best of the fintechs in India, we always have some names popping up on the credit front or the insurtech front, but rarely we will have a that fintech which we can point out, okay, this is the space which has been taken by the well tech. It's yet to happen. I think we have all the building blocks, but we are not there yet. But as Vikas was stating, it's not that this segment does not save. If anything to go by, if we see the mushrooming of the informal saving instruments, either in the form of chit funds or others, we see there is an ample opportunity where people are willing to go for high risk, high cost method to save for themselves and for their family and for their future, right? Uh, and one biggest bright moment that I see is in the form of what we have been able to do in the digital payment space. Just last month, we have concluded with 6 billion UPI transactions. That's unheard of, right? There is a plethora of fintechs which I see are trying to build innovative platforms, innovative product design, so that they can solve for this problem for this segment specifically. And this gives me hope that we are just around the corner, maybe not there knocking and breaking the doors, but we are just around the corner in order to solve this problem. And this is what I would like to drive with this roundtable today. How can we, with the digitization which has happened across the frontier, with the ease of payment, with access of a smartphone, even though limited in the segment that we are talking of, how we can uh, improve on building the financial wealth for this segment. This is what, and we have a very esteemed panel to talk about the different business model and the different channel innovations over the past few years which has happened. So with that context setting, Jaideep, let me first come to you. Gold has been for a very long time, since time immemorial, remained a source of wealth creation for across all the segment. Forget about LMI, across all the segment. Even I remember my father setting a yearly target that this much gold he has to buy, right? Even though he was a banker. So, this instrument is understood by the consumers fairly easily. They have a generation of understanding of how the gold functions, and gold is very liquid. So a moment you have an asset and you pawn it, it becomes a liability, and then you can pay back, and you can again take it back as an asset. So it's fairly flexible in those terms also. My question to you is, why digital gold? What are the innovations that you are driving by by going digital for this asset class? Okay, and how you are able to serve the segment better, which we are talking of, by providing digital gold access to them?
Okay, thank you so much, Nishant, and thank you, host, for all the lovely introductions and setting the context. My name is Jaideep Banerjee, as you can see. I spend a lot of time in the jewelry retail market internationally and India. And Nishant, what you're saying is absolutely right. Gold is a go-to asset, or gold is a go-to social status also. In that way, people love gold all the time and they consume gold. But the segment that we're looking at, and especially say the underserved and underbanked population, the most important thing to understand is their access to gold today. So the way a village lady would actually access gold, and this could be outskirts of Dhule, this could be outskirts of Madurai, this could be this could be Adhiyaman, Kotai, it could be Periyai, Perayur, Melur, really deep down villages of the Tamil Nadu and across the country. Today we are present in almost 5,400 villages. What happens is 4 or 5 ladies get together, they get onto a bullock cart or a matador, and they go to the nearest highway. At the highway, they flag down the state transport bus, and then they go to the nearest town, where every month they go and invest 1,000 or 2,000 rupees with a jeweler. This is how gold is being consumed today. This is the real life story of most of India, how they consume. And we are not even targeting the urban population, because the urban population is saturated. They have enough options, and it is, I would say, it's a slice of time and wallet. They have enough things to actually occupy their heads and minds and investment, and they also have information education. At the rural level, they are only sticking to gold. So for safety, they understand health insurance partly. Rest of that, all the other instruments which we can understand easily, they don't understand, they don't have access to. So to solve this problem that these people have to go flag down an ST bus and go all the way to a town which could be 50 to 100 kilometers away and do this, has a couple of implications. One is they lose the daily wages for that day. They also have to leave whatever they're doing and go all the way to the town. Then what happens is the jeweler forces them to pay a certain amount, because you can't go to a jeweler and say, "मेरे को 500 रुपए का सोना दे दो." He is not interested in something like that because he doesn't have the denomination. So he is fixing them to a piece of jewelry which he is going to ultimately convert into 4 grams, 5 grams, 6 grams at the end of the year, minimum. Because even a thin chain ring, everything cannot be less than 2 grams, 2.5 grams. So the jeweler, what he's doing is he's taking their money, using it for his working capital. In the end, just giving them one extra installment because they used the money for 11 months, and forces them to buy the jewelry which he has manufactured or he has sourced, so that he gets a making charge. This is how it works. Now, when I asked this lady the same question, that how many of you, and I've done 300 or 400 women I have met across the country in terms of focus groups and various villages. When I asked them the question that if I got this product to your doorstep and I told you don't need to fix it with the jewelry, and I gave you a competitive price of what the jeweler is willing to give you, would you be interested? So all the hands raised and said, absolutely, we would be interested. Which means that I bring them the same product which they love so much, for which they are already making the investment of time and energy. I get them to their doorstep, but I tell them there is a catch. I will not give you physical gold in your hand, but I will buy physical gold for you. Which means but I'll allow you to save 100 rupees. I'll allow to 50 rupees, 500 rupees, 1000 rupees, whatever you want, and whenever you have the money. What happens is when it is the harvest season, or whenever it is whenever they get a little bit of money, is that time they want to invest the money in. It is, they don't want to get into a regular cycle. So if you make it convenient enough to pay as and when they want, and I told them that if I buy physical gold for you for the same amount all the time, and I give you visibility of it, so we are really, Nishant, a digital model. We are not digital gold. We take customers' cash. It can be remitted either digitally or through cash, and we actually buy physical gold for them and store it in a Brinks vault. So it is like the Brinks. So it's a large vaulting agency. So all the customers' gold of small denominations accumulated, we buy 100 grams, 1 kg, 2 kg, whatever are the denominations, approved LBMA bars, certified LBMA approved bars, and they are stored for customer. Customer has the visibility on a digital passbook, which they see. Now, the challenge what we really faced here was that the customer may not have trust, because we are sitting in Mumbai and they are in one side. They said that how do we know we buy it? So we solved the problem by going to microfinance institutions, fintech companies, banks, NBFCs who already have an existing base, and we sit on their platform as a cross-sell product. Right. So they are going to the market to give let's say a microfinance loan, to give a JLG loan. When they give a JLG loan, they are also pitching our product. They are saying your JLG loan stays, but you also start buying. So at one side, you don't remain a net borrower all the time. You slowly start building wealth on this particular side. What happens is it has two implications. The customer obviously builds wealth because he gets jewelry, he gets gold, he can redeem it again in jewelry, cash, whatever he wants to do it. The microfinance institution gets a soft lien. There is no direct lien, obviously, because these are two independent things, but gets a soft lien because the unsecured loan, at least he has visibility that the customer is willing to do it. Because a lot of time what happens is they take a micro loan and they buy jewelry. I'll give you another interesting thing that happened when the Kochi floods happened. The government of India gave a ex gratia to a lot of people of about 25,000, 15 to 25,000 was given for medical needs and grocery needs. The sales of Kochi went up. The jewelry sales of Kochi went up during the same period. So I called a lot of jewelers to ask them what was happening. They said about 10,000 rupees of that amount they got, they came and invested in jewelry. So this is the power of the asset class. So our simple endeavor is, let's get the power of the asset class in a convenient, flexible way to the person at the last mile, so that they can start investing without all the trappings of what the jeweler does. Conversion ye hai, ye gini hai, this is a 1 gram, this is a 2 gram, this is the making chart. There are many ways, loopholes. Secondly, if you buy a earring has a post and this thing. Between the post and the earring, they will put perhaps copper or the put up. Now the jeweler, the person doesn't understand. The customer is not able to make out. So there are various challenges in the current situation, the way gold is traditionally consumed. So we are disrupting that and making it convenient and flexible. That's why it will work.
I, I think, Jaideep, that's very interesting because you are sort of providing SIP with a flexibility which suits the rural folks' cash flow, right? And building on the trust of existing channels with whom they are interacting with. I think that's a very interesting model, and I have a follow-up question which I will come back to you. But Ashish, let me reach out to you. Gold has been a trustworthy asset class for a very long time, but investment in the market, especially in the equity and the debt market, has picked up, especially for the low and moderate income segments recently. If I look at the Amphi data, close to 1 crore PAN card has been registered just last year, which is 48% increase. So there is, of course, interest, especially among the millennials and Z class, to understand the equity and the debt market and use it as a means to build wealth for themselves. My question to you is, with India continuing to grow, how we can democratize the market for the middle class, right? What are the innovations which has happened and which can happen on the product side, on the channel side, on the regulatory front, which can really open up this market for the lower and moderate income class?
Yeah, thanks for the question. I think that, while you mentioned staggering statistics, like 48% growth, etc., I would actually wager that it could have been faster. Reason why it is slower than what I would have thought, and why even 48% is a small number, and why I'm saying it could have been faster, is because, very early in life, we are aping when it comes to distribution of mutual fund products. When it comes to financial inclusion through highly regulated products like mutual funds, we seem to be having an availability bias as far as our regulations are concerned. What do I mean by availability bias? Because insurance companies, mutual funds, they all perforce have to be, needless to say, regulated with a particular designated regulator. So there they get more and more stringently regulated. So what is available and registered with you, that you regulate more and more and more and more and go deeper and deeper. But what is not regulated, that obviously flourishes, right? Because that is outside of your horizon of your vision, correct? So what has happened is, why did I say we have been aping Western regulations? So for example, when I don't know much about insurance, but I can speak for mutual funds, our regulation is absolutely top notch to the extent that we are better than US. Okay, we are as stringent as UK and Canada, but we are better than most Asian markets like Singapore. When I say better, I mean to say, we impose significant constraints on how distribution can be taken up, correct? So to that extent, what has happened is we are then left to the mercy of market vagaries, and we are also left to the mercy of self-realization of youngsters in terms of when they should save and how they should actually save. So for instance, that there are many unregulated products, right from the Sardas and Rose Valleys of the world to the latest, high-tech instruments that we all have been hearing about. So the unregulated ones grow faster than the regulated ones. That's the reality, correct? On the other hand, when it comes to insurance, mutual funds, etc., distribution practices are very heavily regulated. So if you see the unit economics, like mutual fund industry very happily takes 100 rupees from people, correct? We take money on UPI, we take money through various apps, and we take as little as 100 rupees. But the point is that the fintechs or even the offline distributors who collect these 100 rupees have no revenue model. And I think some of the fintechs have shot themselves in the foot by going for the RIA kind of practice, because in the quest for offering direct and in the quest for offering commission-free products, very early in life, they've killed their own revenue. They should not have done that actually. And even the regulatory intent is not that direct plan without commission is meant to be direct without advice. That's not the regulatory intent. So if you don't take commission, you should have offered direct plan with at least some nominal charges. But here what has happened is that, sometimes cartelization can be good, but here there is no cartelization at all. And everybody is busy killing each other. So I think that the revenue model actually is suspect, according to me. Product manufacturers like us, we make sure, like any good product manufacturer, we make sure that we are ambivalent to the mode of acquisition and mode of service and mode of distribution. So we treat all touch points equally. But the point is that, revenue model is a challenge. And I think now there is a welcome move, where the regulator is discussing whether these direct platforms should move out of RIA and actually work as transaction platforms. I was very happy to hear that, because then somebody is thinking constructively of bringing a revenue model, because then they can earn from transaction fees. I think if that happens, that's very, very good. Because all of us put together should work hard for the, regulated products to move forward.
Right.
So that is one area. Second, of course, is that we are obviously not in the sweet spot of gold in that sense. Of course, gold doesn't offer growth, but gold is a darling asset class. Asset classes like equity, they do offer growth. But then there is always the challenge that it's a high risk, variable return product. So what type of product should we construct? So if you really ask me, if we do more of multi-asset kind of products which cut the volatility and standard deviation on the downside. But see, today, if you ask me as a finance professional, what is the biggest gap in the market? Biggest gap in the market is that there is no product which can give you 7 or 8%. If you go to the bank or if you go to fixed income, high risk fixed income can give you 8%, but it can default also. Plus there is taxation and resilience issues. So the biggest gap in the industry is something which can give you 8 or 9%. Because fixed income is on the lower side, equity is on the higher side. And in between there is a huge wide gap. So if we can solve the transaction cost and the distribution, distribution must be paid and must be incentivized. Can't expect anybody to do work for free. So if we can solve these two conundrums, that, and one of them, obviously, like I said, there is progress, that, there is discussion on transaction platforms charging a fee, which is great. But apart from that, if we can solve, because see, we are not allowed to give assured returns. We are not allowed to talk too much about how we are structuring a product. We cannot do any nudge, wink, wink. That's not right. So the point is that in a bankable fashion, you need to get a capital market product, which will give you more like 8-9%. So the creation of the right product and solving for, a revenue model for distribution, I think both of these things are important.
Thanks, Ashish. I offered debt mutual fund on my platform to the artisans and weavers community. Apart from, making them understand how mutual fund works, that of course is a challenging part. I used to drop almost 50% of my users because of the onboarding process. That's such a hassle compared to if you see any other, say, for example, even bank. Opening a bank account was perhaps more simpler than getting them onboarded for a SEBI registered distributor for buying a mutual fund, right? So I completely relate with what you are saying. And regulator is thinking in the right direction, I feel, but there is a lot of scope if they have to look at the bottom 70% or 80% of the population. If they have to target that, then more innovation need to come from the regulator and the industry for sure. Thanks, Ashish. Paddy, let me come to you because you are somewhere in the middle. So gold was the darling asset class. Ashish was dealing with pure equity and debt, right? You are somewhere in between because you are matching the two aspirations, which is you're saying that, okay, boss, you have a goal, I have a beautiful product, plus perhaps I'm also offering you, I will also sweeten the deal for you, right? By talking to the suppliers, either gold or vacation or buying a fridge or TV, right? Uh, my question to you is, in this world of buy now, pay later, why save now, buy later, right? What was the need? How did you feel it in your own personal experience? And uh, I know audience would also be very keen to understand your business model. What makes your customers stick?
Sure, Nishan. Yeah, thanks first up for having me on this panel. Great to be here. So yeah, in terms of the whole save now, buy later that we actually created this concept, it is something that our team takes a lot of pride in because this is not a Indian version of something that has been working very well in the West or in other parts of the world. This is like truly created globally first time. That is what we've been able to structure this. The whole idea or the genesis is, we are three founders, Vikas Jain, who ideally should have been in the panel looking at all the esteemed finance professionals. Here I'm a tech guy, sort of the odd one out. So he's the in our fintech, the SEBI, RIA, CFA, and all that. But yeah, anyway, so he was in the HNI advisory space post his GS stint. And what he was doing for HNI is giving them fantastic returns. When we were actually discussing, we were actually thinking, okay, increasing the wealth of HNIs is great. There is, whatever you do from 12% to 15%, if you can do that, that's like going to be really good for them. But if this can be done for retail, not so much on the low income, but definitely on the middle income and retail users, this would be like a great some in terms of impact, this would be great. So that's how we started thinking about this initially. But very soon we realized, people fundamentally, when we actually look at saving or investing, it's always for the future. So there is no instant gratification to saving. That is one thing that we realized. But what we also saw was people were spending, consumption spending was happening on credit. So I had a personal story. One of my friends actually took credit card loan to travel to outside of India, 36% interest. I thought this was criminal. Thankfully, this was just before COVID. He didn't have any job loss or anything. But if something like that would have happened, this person would have taken at least 2 years to get back. So this was really a trigger point for us. Like, how can people actually do? I understand the role of credit, but from a pure consumption discretionary spend, so taking credit for that was criminal in our minds, and that's where we realized we should actually, and the way we were actually spending. So that is something that got us thinking in terms of the user research that we were doing. So if we just break down the wallet share, the spending share of the wallet is a lot higher than what we consciously save. And when I'm talking about spending, this could be something like a discretionary spend like vacation, buying jewelry, but also essential spends like paying school fees, paying for your insurance premiums, a lot of such things, right? So people actually have these needs which keep happening throughout the year, but the way we were spending was primarily coming from our bank savings. So the CASA accounts at 3% return and inflation at 6-7. So we are basically losing money there. Or people fall into credit, which is like even worse in terms of value. So that's where we thought we could actually build a product wherein we can help people to save for their upcoming spends, plannable spends, where they could actually get returns which are better than their savings returns. And we work with the brands also because most of these spends are connected to a brand eventually. So if we can directly work with the brand, which where they were anyway doing the subvention with their BNPL partners, why don't we get the subvention back to the consumers? So the brands were happy to do that. And together, this becomes a very attractive, potent sort of a mix. You get the returns from the market and you get brands to add a kicker. So this becomes like an annualized return of almost like 15% in many cases, which is very attractive for most users for a spend that is anyway going to happen. So that's sort of what is the genesis of this whole save now, buy later sort of a model as an antithesis to BNPL. And again, we are not fighting BNPL in every aspect, but wherever it is possible in terms of things that can be planned. So that is what we would want to focus on. Like, you mentioned about world which is around instant gratification. So we are not fighting instant gratification really, because it's a tough fight to fight. Someone asking someone not to do something today. But if there are things that can be planned, like if I want to gift something to my wife for anniversary, I can gift something today, but that wouldn't count as an anniversary gift. So I'll have to wait for the anniversary date. It happens at a specific point. Or if I want to renew my insurance premium, health insurance premium, it's happening at a specific point. So that is what actually gave us this whole idea of building a product around this. And from a keeping the focus on Bharat, so of course for us we are not so much at the lower income at this point in time, but more on the middle income. But from a Bharat perspective, today with a lot of people working remotely, and we have more than 50% of our teams working from places like Kuch Bihar and many other places across India. So the Bharat, that is what we are actually trying to address, even maybe at the middle income sort of a thing, where people can actually, either it is aspirational spending that they are doing or essential spending. If they can start saving, and if they are making this additional value, it could be 5,000 or it could be 10,000 in a year, the impact for them is far higher when they can actually do this. So that's the sort of idea for us when we actually started building this. And we don't want to be a preachy sort of a product where we are asking people not to spend but keep saving. We want people to enjoy life. We understand that all of us have dreams, aspirations. We want people to enjoy life, but we want them to do it debt free. So that is the whole idea here. And fundamentally, Indians also have this habit of, we want to pay the lowest. We look for deals. We've seen this in Kerala, that Lulu Mall, when it was opened, the kind of crowds that went there. We always like to spend, pay less. So that is what, from a pure economic standpoint, the model that we are proposing here, the save now, buy later, it beats every other system from a pure economic standpoint. So consumers are going to spend less or pay less for their spends.
Okay, Patty, this is so interesting because you also have a distinct advantage of not pushing people into the debt trap, right? Compared to, say, a BNPL. I'm not blaming, but I'm just stating that it can happen.
Right.
That's one. Second, efficient savings also always has a component of efficient expense, right? And save now, buy later, I feel that it's sort of a overlap of these two, where you're not only saving efficiently, but you're also having your expenses done in an efficient manner. I have also, within MSC, when we have, and from my own experience of Laksha, when we have, went to the customer and talked about it, one thing I realized that save now, buy later can also induce them the habit of savings, right? Because here there is an instant, if not instant gratification, but at least a delayed gratification after 3 months or 6 months down the line, and gives them a motivation to save, which otherwise for long-term savings is a lacking thing in most of the users. So thanks, Patty, for sharing that insight. Vishwanath, let me come to you. I think the elephant in the room is the channel of distribution, right? And I don't think anybody can match the channel of distribution which IPB have if they are leveraging on the post bank network of Dakia. Is upward of 3.5 lakhs, right? If you include all the different categories. And Ashish has talked about challenges on the channel front because of the tight margins, highly regulated. Nobody is going to do it for free, right? but it's not also simple and easy to create a channel from the scratch just for the savings. It has been done, especially with the MFI, when you have credit where there is a larger margins at play, even in the on the insurance front when you have a larger margins at play. But doing it for the savings and investment where the margins are tightly controlled, the products are highly regulated, it's not easy, right? IPB has a sort of a default largest network of dakiyas available. My question to you is, given the license of payments bank that you have received, you have been working on this front for the last 4 5 years. What sort of innovations on the product and product front you are doing to make it even more convenient and easy to spread savings and investment for your users, right? And I'd be very happy to understand how you are leveraging the whole post office network also in this product and channel innovation.
Yeah, thank you, Nishant, and hope I'm audible.
Yes, you are.
Okay. Sorry, I am in transit. I am sitting in the airport, so you may get some disturbance along. So please excuse me for that. Thank you for the opportunity, and it has been like I got to hear some of the very brilliant insight from the early speakers. Uh, when it comes to IPPB, as you rightly said, one is that the distribution strength of IPPB was there. We have done our best to the ability to convert this, gold mine into a workable proposition to the extent where these postmen can actually pick up the idea of becoming a kind of a doorstep banker. Uh, Certainly, the aspiration is to make them also a wealth manager in the future. If the environment and the market maturity and the products and the technology all put together comes to play and fires up together, and I'm sure that's the possibility that we are working towards. uh, in terms of the structure, I'll take a minute of your time to detail on that. We are kind of the Department of Post works as a business correspondent for us, and each of the postman and the Grameen Dak Sevak, being a part of Department of Post, becomes a distribution point for us along with the post offices. And these are the people who have been trained to carry on the digital banking aspect of the entire journey in a very, very remote location in a complete paperless manner, which was itself a new concept for anyone in that geography to experience for the first time, either be the distributor or the customer. Both of them were actually very new for this kind of concept, and we were able to break that a kind of a myth that it can't be trusted by the people, since the trust was carried by the postman being a sovereign representative. Only big thing to break was to make them trust the technology and the digital transactions which is happening at the back end, and which they need to trust because there was no passbook, no paper trail, nothing for them to understand what is happening at the back. So yes, that's the position that we are in today. Uh, in terms of kind of the process that we have undertaken for making this inroad little more solid, uh, we are working on multiple things together. Uh, so what we started is with the financial literacy camps, which was the backbone, the basic backbone, where you will find in the deep remote location, maybe 400 kilometer away from a district headquarters in a large states, or 200 kilometer in a smaller state, very very deep tribal, maybe where you won't have got much of an infrastructure, but then there will be some hamlets, some people which is served by the post office and a postman nearby. So we were able to gather them to a small groups for purely a purpose of to disseminate the knowledge on financial literacy, because they are the ones who are the target audience for this bank. since our strength lies in the rural and remote location. So this was done religiously for initial years. Then we got support from the NABARD and the Investor Education Production Fund Authority from the Ministry of Corporate Affairs together, and we all in the journey have got tons and tons of people coming in, joining us, knowing about it, and people experiencing it the first time with digital banking. Then we started working on the kind of the uh, product suite that we had. So initially we started with the very basic plain vanilla, but then we started offering insurance, which was again very tailor made for meeting the need of these people because they need to understand the value in it. We interestingly also had a POC done for a mutual fund distribution, which was considerably successful given the kind of timeline and this constraint that we had. In terms of onboarding, as you rightly said, it is a challenge. But yes, we have experience. We had a first-hand experience of doing it, and we found it doable. Probably we'll do a full-scale rollout in a couple of months' time from now. Again, purely digitally done in a very conducive environment where people are able to understand it before they start investing. So we take that that much of uh, uh, time and patience to make them understand it. Then we had also moved out of the paradigm of bank customer definition. So we went ahead and started creating a universal banking service platform, which is like more from the G2C, so that more and more people can actually experience the products in the financial domain. And we started with the APS and then the DLCs of the world, and then the UIDA CLC program. What happened by having such kind of products, which was not pure play financial in many ways, but then it gave us opportunity to reach out to multiple people who were not constrained by saying that what will I do if I'm not a bank customer of IPPB. So it just opened the door wide for everyone around the postman and the post offices, and it helped us to make the communication messaging very clear, reaching out to the last mile. Then we had also done certain things like in terms of uh, reaching out in the hardest of the time, tougher the time people were facing in the COVID. So that gave us them understanding that their money or the liquidity of the asset, which we were having the concern about when people invest, they have this big concern whether I'll get the money or not. We made them realize that it is there for you. I mean, even if it is a pandemic lockdown, you are not away from your asset. If anything happens, or if anything happens to you, your family behind will not be having any challenge facing, in terms of accessing those, the asset that you have built up. uh, and then the regular business as usual as stuff like the training capacity building which keeps on going. And let me tell you, as you rightly said, 3 lakh plus people getting trained on a standard format, with a kind of content which is rigorous in nature. Assessments need to be done, and now the IBAF certification is in place. So I mean, you can just think and imagine of the plight that we have in terms of meeting all those challenges. So yes, these all put together have really uh, helped us, and we are continuously uh, working with the since now this has become very visible, not in the media or anywhere else, but to the people who are into government. Let's say the district magistrates and the state government and the departments, they picked it up very nicely, and they are saying that, "Oh, why can't we give the mandate to the IPB for doing certain things, which then take away my sleepless nights away." So they are now issuing a lot of mandates to IPB in terms of DBTs, account opening, delivery at the doorstep. And the best part is delivery at doorstep, because that's the USP we have. Nobody has it actually in real sense. uh, uh, you know uh, Having around 1 lakh customer being opening accounts on a day is something unheard of in India. And every 30-40 seconds one customer opening account is also very rare, that you see as a phenomenon. So that's where the beauty lies, and we are trying to expand the horizon. We are trying to again get into kind of technology-backed services to ramp it up in a way which helps reach all the complex products in a very, very simpler manner to the customer.
Thanks, Vishwanath. I think it's so good to hear that you are playing on your strength, right? Which is the trust which people have on the dark years. You are strengthening that, having a play of the technology to sort of zoom or scale up the impact on the last mile users, right? So you know. When in 2011-12 when I started working in the financial inclusion space, we always used to have this debate that the day post office network become aware of their own strength, I don't think anybody they have to worry about the competition, right? And I think that's what is getting realized in the last few years. I have some very interesting question with you, Vishwanath, but Jaideep, let me come back to you, okay? And I have a follow-up question on. You mentioned about that you have access to the rural population, and that's where you are focusing on, right? But there are constraints in terms of access to the smartphone, constraints in terms of cost of channel, right? Because savings itself has low margins. And when me and my co-founder used to sit, we always say that you can provide savings, but savings has to earn from some other product, right? That was the usual joke we used to have. How you're solving for this? How you are overcoming this some apparent constraints on the channel in order to reach out to the last mile and very underserved areas and the segments?
See, a couple of things to realize in terms of the network itself. Most of the people that we are partner with are people like microfinance institution and NBFCs who are already going to this customer and collecting either in cash, or the cash is getting buried at a BC point, or one of the representative becomes a leader and takes that and goes to a BC point and remits the cash, and that is how the collections happen. So the collection problem is not such a big of a problem for us, because many of our partners and large partners that we have don't want any cash collection. So because they don't want cash collection, we had to, of course, you can do UPI payments, and we realized that somebody in the household actually has a smartphone. It may not be the person themselves, but somebody has a smartphone. And let's say the world has got divided between, before Geo and after Geo. I mean, after Geo, the World Wide Web and internet data and everything has become far, far superior. So what we tell our partner is that we already have tie-up with the BC partners. That is our own tie-up. Now you utilize our network to go and deposit this at a BC point, and thereby the cash collection part of it is taken care of. As far as our bigger problem is the technology part of the integration with the partner. That is when it takes the maximum time. It actually, otherwise it's not a problem, because what we are aiming for, and we'll come to a second question after that, in terms of only savings, what we also offer on top of that is a digital loan that you can take on your savings. So instant liquidity. Number two, you also obviously can redeem it in jewelry also, so you can actually aspire for jewelry. Other thing is that we also do physical gold loans, and we are the pioneers in doorstep physical gold loan in the villages. While Rupee and all have been doing it, India, IIFL have been doing it for a long time, they are still restricting themselves to the towns. What we do is we have a partner branch, because this is an MFI. At the partner branch, we have our own person. That person, along with the branch people of the partner, we are actually going to the customer's doorstep. We pick up their jewelry, pouch their jewelry, pass all of that information digitally to our partner, who's a lending partner, and the loan gets disbursed. So we are trying to become what the banking industry does. We are trying to do it from a gold perspective. So we will have gold payments. So we will have a gold debit card. We will have gold savings, which is your CASA model. What the banks do are loans, savings, and payments. We already have started the savings channel, which is microsaving. We've already started the loan channel. And now the next one that we're doing is the payments channel, where once you have an investment in your gold account, let's say 2 grams, 4 grams, 5 grams, we are offering you a gold card, which can be a co-branded card, to the customer to go and then swipe the card at various locations and utilize the cash, which other or utilize the gold amount to do their necessary, and we can restrict it to probably medical emergencies. We can restrict to perhaps a school fee, something that they really need to do instead of taking a informal loan from microfinance institution at a month, because this is their savings. So it's a combination of something that Paddy was also saying, which is that you start getting into the habit of savings. We are not forcing you, we are enabling you, we're facilitating you. We start into the habit of saving, because this savings can eventually help you get out of the debt traps that you can otherwise create for yourself. With keeping this in mind, that we are actually going to that population who doesn't have access to it at all, except informal loan, because our vision is very clear that we will go to the underserved and underbanked population of the country. We are not looking at urban population at all, and that's a sizable population. It's almost 400 million people on that side, which are not getting served. So the larger the network that we are able to build with our partnership, the larger partnerships we're able to build, the faster we are able to integrate. The API integrations can happen, and the faster our product can go on their platform, the earliest we will actually succeed and get into scale. I mean, it has taken us almost 2.5 years to get to this stage where we are present in 5,400 villages. If I could get a bigger partner with a faster integration, we could actually be in perhaps 3 lakh villages in the country in the end of the. It is as fast as that, because the product doesn't need to sell. In the moment to say gold, people say gold. They also understand the partner, because partner is already dealing with them for the last 4 or 5 years.
Right.
So it's a very, very, very scalable model almost instantly.
Right. So Jaideep, again, I see a trend where you are again playing on your strength, which is innovation on the product, right? You are still riding on the existing channel of either the MFI or the BC network in order to serve to the users, but sort of creating a value chain or capturing a value chain which is as wide as possible, right from savings to credit to payment, and that's an interesting way to look at it, because then you are trying to serve or provide a 360-degree holistic solution. You are not focused on a product, but you are actually looking at providing a solution to one of the pain points of the users, right? Ashish, let me come to you next. You have discussed at length about the regulatory challenges. You have also discussed about the what fintechs should be doing. Let me delve a little bit deeper on that. I have seen many fintechs which are trying to build something innovative, something which can work in this segment, but they have to deal with the twin problem of how they can provide advisory at a unit scale which is much lower than perhaps what mutual fund industry is used to, right? And at a margin which is tightly controlled, right? How they can build a innovative platform, how they can build solutions, and at the same time be sustainable in their business models.
Yeah, I think, like you have, basically it should be limited advice. Like, for example, if you have somebody who is investing in millions and crores, and they have, multiple different types of goals in front of them, then, of course, you can have a full-fledged wealth management or private banking proposition. But on the other hand, within this same panel itself, we are talking about very narrow and yet successful examples, where we spoke about somebody saving now in order to buy a specific item of, either gifting or consumption at a future date. And we are also talking about saving by way of gold. So clearly, I think maybe not, maybe when you're talking about advice, then obviously advice cannot be that narrow. Advice has to be goal-led. But I think if somebody can make, productize these solutions or make them pre-packaged, and offer us 3 or 4 or 5 different choices or solutions, then, I think it can work very easily. More often, if the advice is embedded in the, product, that also works very, very well. So when I say that, there is advice which can be embedded in the product, you might be aware that SEBI has these sandbox mechanism. So
Right.
nothing prevents people from experimenting on some of these. Like see, guys like us, we are doing fund management and investment management at a core level, but nothing stops. But people who want to give advice to clients to meet their goals or to create different risk return combinations by way of asset allocation, nothing stops them from using the sandbox regulation, to innovate and try to create products which are a blend of multiple underlying products, but then they give an outcome which is closer to what the customer finds palatable or easier to consume, right? Also, the fact that the mutual fund industry, at some level, I always say on a lighter note that to buy 300 good stocks, we have 3 or 4,000 different funds.
Right.
We are known to complicate things.
Right.
We are known to complicate things, but of course, nowadays even the mutual fund industry is trying to come with simple products. Not done much yet. But given that the mutual fund industry is creating many Lego blocks, with all these passive funds, I always see passive funds as Lego blocks. Considering that we are providing you so many Lego blocks, someone can definitely innovate and make prepackaged products. 3 or 4 products, where that's what I meant, that the advice should be embedded in the product and it should serve a specific need of a customer. Then I think it can be scaled.
Right. So, Ashish, this can go as simple as that, which is how you can make the products which is more suitable for the user segment. And what I'm hearing is that nobody is stopping. There are enough building blocks available within the mutual fund industry to make something which is non-complex, to make something which is simple enough for this user segment to understand and remain invested over a period of time to create.
See, when you say simple or non-complex, let me put it this way. I mentioned to you, sometimes it's good to answer your own question. I mentioned to you that the biggest gap is to produce 8%.
Right.
Now, for example, to produce 8%, you can't give fixed income or equity. Obviously, it has to be some complicated thing which will buy some uncorrelated asset classes and create a multi-asset product, blah, blah, blah.
Right.
Now, the creation of such a product can be very complex. But what you communicate to the outside world or how you distribute it doesn't need to be so complex, right? Very often we go and tell people that, this is our equity fund has multi-factor diversification, blah, blah, blah. Now then multi-factor diversification is done to beat the index on a consistent basis, but 99% of our audience doesn't understand that. So you don't talk about it.
True.
So what you do to construct a product and how you communicate and how you distribute, those are different things actually.
Right. Ashish, I have a follow-up question on that, and if you can answer it brief. I have also heard from a few distributors which says that, if on the one side SEBI and AMC keep squeezing on our commission, on the other side they keep simplifying the communication, what do I sell to the customer on the ground? Because he says that, okay, if you're giving me this is the fund which is suitable for me, which I can go and buy in a direct fund house instead of buying via you. So how do you solve this sort of a dilemma for the distributors?
Yeah. So, I am tasked with creating an asset management company now in 2022. So everything that you're describing, a lot of water under the bridge, I have lived through all of that. And still when I'm creating an asset management company in 2022, I'm very clear it is B2B. There is a reason for this. The reason is because according to me, the role of the channel or the distributor is not just to carry the product or offer the product to the customer. See, there are multiple things. One is simplifying choices. See, if you ask me, direct meaning, if you go to my website, I'll make you believe we are the best, we are God's gift to mankind. But it's not true, correct? There will be cyclicality of performance and there are others who are as good. So the point is that one is simplifying choices. That's what a distributor does. Second is obviously a distributor provides aggregation. A customer needs a car and I may be manufacturing alloy wheels. That's not useful beyond the point. A customer cannot go to, customer basically needs multi-product, multi-provider service. Customer doesn't need single product for every, so many providers for so many products. So customers need aggregation. customers need transaction and reporting related convenience, right? So there are many things, and of course, third party is third party. Like I said to you at the onset, there is value just for being third party. So I think that distributors play a role beyond just being purveyor of the product and hence how much commission should they get, etc. I think it's more a question of how you demonstrate that value to your client. But if you ask me as a manufacturer, I find distributors to be extremely important, and I don't think that they can be done away with from the value chain. I do empathize with the fact that margins have consistently been shrinking. As the industry becomes more and more meritocratic, fund managers who have good performance, they do command their margin, no doubt about it. But then the fact is that you cannot function without distributors, because according to me, at some level, for customers itself, it is inconvenient not to have a distributor.
Right. Thanks, Ashish. Thanks for clarifying on that part. Vishnath, let me come back to you. You have mentioned about training of 3.5 lakh Dakias. You have mentioned about reaching out to the segment which have not experienced the technological solutions on the banking front before. I'm pretty sure that this may sound simple, but there are very complex participation from different stakeholders in order to make it possible on the ground for the users. So my question to you is how you are leveraging the fintechs or the private participation in order to solve some of these complex issues at the IPB, and what sort of innovations you have been able to leverage, and if any startup has, and what are the solutions which you are looking for in the next few years from the private players?
Yeah. Nishant, as I was mentioning, this humongous task of reaching to the last mile is something which any entity, even if it is India Post, can't take alone. Since India being an India, in any country, one country. So what we, I mean, it was in discussion for long, and the policy think tanks of the government already have envisaged to create a public good infrastructure, and IPP DOP combined was identified as one of the key player who can actually bring this into a play. Uh, so we actually started exploring the collaborations with the fintechs, not in a typical regular hackathon way, but we wanted to bring on to the strength of these fintechs into a longer play for a very symbiotic relationship partnership, and which gives both the player a sizable chunk of commercial viability for sure. And this was also to power the innovative solutions which can reach the last mile and do the kind of bring the unbanked and the underbanked societies into the inclusive service model of the banking. Uh, so we launched a program called Finclovation a few months back, and your organization, MicroSave, was one of the instrumental player in helping us do that. And we have somehow been able to wield the ministry and a lot of industry player into this, and got a kind of understanding that this is one of the ways that probably organization like IP should explore in a much deeper way. So what today we are at is we are working with the model to invite the applicants to showcase us the prototype or some kind of idea, or the kind of plans that they have in place, which revolves on multiple aspect of it. So we have invited applications on couple of tracks. One was to make the credit as simple, because that is what our minister was also very keen about. Mr. Srinivasan had this talk while we were launching the Finclusion. He said that why can't the credit reach like the UPI that we see today in the market? Why can't it be so simple for the end customer, even with the no credit history or no data to back their, you know, the credit score and stuff like that. That is where the idea came in, and we started working on that. Then we had another track for discussion, which was the digitization of the e-money order. So e-money order is itself a digital product to some extent, but not end to end. So we took up as one of the challenge statements for making the EMO as an end-to-end digital product, and which was again a product from the from the Department of Post, which was not seeing too many takers of late. Uh, so the second idea was on that. And third, we kept a couple of open-ended participants with their own suggestions to come up and evaluate the situation and give us a kind of suggestions which can be a workable proposition. So like account aggregators, the UX, the CX of the world, and multiple things, maybe the digitization of a lot of processes which still have not been done. So these are the kind of things which we have been working upon. And you will be happy to note that a very quick short window period for application generated a lot of interest and very good quality fintechs. We have got good 100 plus or around 100 applications. Today we have got the evaluations done, and we are in the second stage of POCs with 9 of them. And very soon we'll be the results have been announced on the website. We will very soon be getting into the paperwork, and the next stage will be the the funding stage, and taking the prototypes further, whichever we find suitable. So this is one initiative which we are very, very keen upon. We actually had a precursor with the Fintech Yatra, where we have been able to touch base with around 400 startups across the country, while they were doing the camps in every locations. But it was little bit impacted because the COVID wave came in between, and we again but then the vibes were very, very positive, and we got the sense of the direction of the wind. And we saw the outcome in the Finclusion drive, which was very, very positive. So we look forward to have many such collaborations, and give them the ample of the kind of a base of the customer where the testing can be done. Your fail fast approach can be proven as early as possible, so that you can actually move on to the next level of innovation. So that's where we look forward to.
So, Vishwanath, a quick follow-up question. If any startup has a innovative solution where they think that IPB could be a able partner, how should they reach out? What is the simplest way for them to inform it
So
and
the
showcase it?
usual, yeah. So the usual ways that we announce the opening of the window for application submission on the website, which temporarily has been disabled because the first batch got just over, and we wanted to complete the process for evaluation of those set of applications. But in any case, between of these story, if somebody want to still reach out, we have our Finclusion page live on the website. There is an email ID which can be used for sending a specific request, and we can still look into those. But then, yeah, the cycle of the window opening will be very frequent. Maybe it's a first round of it, so it took some couple of months. But then we will be keep on rolling out the opening and closing of windows. So it is there.
Perfect. Perfect. So any fintech which is listening, please, you can either reach out to IPP directly, or wait for the opening of the next window, where you can apply with the solution, or with a reply with the specific problem which IPP is facing with your solution. So thanks Vishnath for that. Patty, let me come to you. There is we have touched a little bit on the instant gratification piece with your solution. And you have mentioned about on the supply side why it is good for the customer. I'm very keen to understand what is on the demand side? What you are hearing from the customers? What are the feedbacks, both positive, negatives? If you have to share, what is it that you are hearing from the customers? Why they are sticking on your platform? What is it that they like, and what is it that they don't?
Sure, Nishan. So, I mean, I mentioned earlier, instant gratification is a tough fight to fight, and we are not there to fight it. It is definitely not possible. If somebody wants to get a phone today, asking them to save for 6 months and then do it, it's not going to happen, especially when credit is accessible so easily. Right. So we are not fighting instant gratification, but our focus is on plannable spends, what we call as spends that can happen, that can be planned. A vacation travel, people have summer holidays or winter holidays. That is when most people can travel. If your family, school fees, essential spends like a school fees, it happens at a specific academic calendar, or anniversary gifting, birthday gifting, insurance premium. So we are actually focusing on plannable spends, which most cases we have to do it, and which can happen at a specific point in time in a year, and that is what our focus is. So we are not fighting instant gratification. So that way it's very clear for the users that okay, they are not asking me to do something which is unnatural, because we are though we know we all know compounding is very beneficial and all that, the benefits of compounding, but I mean, we are not rational, right? We are fundamentally irrational in terms of how we behave. So we totally understand that, and we don't want to force something on users which they are not comfortable with. So that's where we are focusing on spends that are plannable. It could be discretionary, it could be essential, but essentially those that can be planned. So that is what our focus is. Having said that, so that way it is very easy for people to connect, and there is also the clear value proposition, right? Like I mentioned earlier, from a pure economic standpoint, this system beats every other system when it comes to spending, and people definitely can relate to it. If this is the lowest that they are going to pay, I think we have their attention. So that is what is working. In terms of challenges, what we are seeing, Ashish mentioned about that, in terms of the regulatory challenges, as a fintech platform, so we are offering mutual funds or digital gold or any other asset class that we are actually offering. So people have to go through certain KYC process. There is some bit of a friction there, right? So people, that's something that we are actually trying to work around. The other friction, other challenge rather, is there is no reference for multiple. There is no anchoring today. So it's not like, oh, it is like this or it is like that. So there is no reference for people. It's something that any category creator will have to face, and we are absolutely prepared for that. But that is something that requires a lot more education and a lot more patience. So we just have to constantly talk to people and help them understand that this is something that is very dependable. Another factor that comes into that we keep hearing from users is like, what if multiple, it's a startup, what if multiple is not around, what happens to my money? So that's something that we try to educate people, and we also do a lot of communication around that. We don't hold people's money, it is getting invested directly in people's names, so they have full visibility and control over their money at all points. So that's something that, I mean, it's all part of our education process, but these are some of the challenges that we are facing. But fundamentally, yeah, our focus is on plannable spends, so people can relate to it a lot easier.
Nishan, there is a question from a FIAX community. This is for Ashish and for Vishwanath. The question asked is, is your organization looking at fintech startups or a well-tech startup as a digital DSA, or you're looking at them to develop the product? Because is it just a distribution that you are looking at fintech on, or you think that they can develop products? So this is one question. And the second question is for the Jaideep, where they're saying that offering gold as a product by a fintech company, isn't it like a demand or a time liability? Are you not like any other bank? So will you not become like a bank, because actually you're giving gold, and whenever the customer wants, you're returning that gold, or you're returning that money to him? So these are the questions from the clients community to the panel. Maybe Ashish, you can start with the first. Ashish and Vishwanath can answer the first question. Yeah.
No, see, the logical proposition always seems to be that, any asset manager or any investment manager is obviously single product, single provider. So the first and simple starting point is that fintechs can be aggregators and they can be intermediary or distributor or a registered investment advisor platform or whatever you call it. But what I was mentioning that by way of technology or by way of some kind of sandbox regulation with a limited asset management license or whatever that you can try it out with the regulators' blessings. But the point is that either through a technology solution or through some solution through the sandbox regulation, you can always, also create your own products which are riding on top of the building blocks provided by the investment management industry. So I think that if one really applies themselves, both are possible. Doesn't necessarily have to be only intermediation.
Vishwanath?
Yeah, from the partnership perspective, I'll take that question. We are looking actually for both in a way. I'll tell you how, because we have this products also there which is ready, or for aggregator models are there for us to play for different manufacturers to distribute, and we being a digital bank, many a times these multiple players have to come to one single platform through which we can actually become one of the distributor for a single window distributor for the customers. So that is one part of it. Second is, we, and in the Finclovation specifically, we are looking for development of the products. So let's say, for example, as I told you, how can the one of the track was for the e-money orders to be digitized end to end from customers hand held device to the receiver doorstep. So how can this entire journey can be digitized? For example, we talked about the creation of the digitalization of the credit. So where we want the entire credit product for the end customer without a journey of the credit or the credit history, how can he become a credit worthy person for the bank? So we have tied up with a lot of banks for the product, but what happens, product to reach to the doorstep still needs some journey to be covered in the digital world. So that aspect also has to be developed into the technology part. So that is where we want to develop those prototypes and distribute it using those applications and modules. So we are looking for both kind of associations.
Fantastic, fantastic. So Jaideep, what about you becoming a bank?
Yeah, I wanted to understand where is the concern in what the question is. That is my most important point.
So the question that is said is, today we save money, we keep it in the bank account, right? And whenever we want to withdraw it, or maybe we keep it and we get an interest. So like when we keep a gold with you and you mark it, you keep it in your whatever is wherever you're keeping it. Books become, because, and whenever a customer wants the money back or the gold back, he can get it back, right? So are you not becoming like a bank?
Okay, cool. So I understand where the concern is. Number one, I think what we need to differentiate is that we are going after those people who are underbanked and underserved. We are not looking. So the first important thing is that the target audience for us very, very clearly as a vision of the company in the last 3 years, we don't deviate from that at all. We are going to the underbanked, underserved who don't have the option to bank. Many of them don't even have bank accounts, formal bank accounts. To that kind of a community, if you want to include them financially, if you want to get them into the main financial markets, if you want them to get a sense of belongingness in terms of the Bharat, there is only one way they can do it, is once they get slowly and steadily start contributing towards building of the country. Now the challenge is they don't understand any other asset class. And here, when Ashish also mentioned that gold is a darling class, which is true, because that is something that protects them in terms of the social security, because we don't have any social security, we don't have any pension plans really, we don't have any old age retirement plans at that target audience. So yes, I would be a bank to some extent, but to the extent that I'm not regulated like a bank, I do not preach like a bank. I do not create systems and operations which become tougher for them to do it. The bank tells you what to do. I am telling you, I'm giving the control in your hand. Here is an asset class. Save for yourself, save for your aspirations. If you want money in emergency, kindly dip into it. We are not blocking you there. We are not restricting you that, oh, there has to be an entry barrier, exit barrier, oh, there's a threshold. None of it. So when I make it flexible, there will come a time. I understand the concern that perhaps what we are saying is that the population is not intelligent enough to take that call. I am actually coming from the consumer side. I am saying let the population decide. They are leading real lives. They take real life decisions. They can also take decisions on savings. Let me not become preachy, and which is what I liked about Paddy's point also. That is not about preaching. It is about educating and telling them, here, guys, this is a very nice proposition. I will make it flexible. I will make it convenient, and I will do it at your doorstep. You still want to fall into a debt trap. You still want to go to a money lender. You still want to go to a. What happens in a village situation is when you want money in the middle of the night, you go and knock on the jeweler's door. The jeweler doesn't ask you, why have you come? Jeweler simply asks you, kitna paisa chahiye? Because he knows you would have come at that point in time, and he charges you interest which are 10-15% a month, and then those guys then give away their lands to them, those guys give away their livestock to them. So I am telling that community, boss, you don't have access to bank, you don't have access to formal systems. I am reaching you through a partner who you trust. Please invest and start getting into the habit of investing. Now, I am not going to educate you about mutual funds. I won't educate about preference shares, convertible, debentures, and everything that the finance industry makes it very confusing, so that nobody really understands the real product. Here is a product that you understand. Here is a product that can even fulfill your aspirations. And here is a product which can make you empowered in a household. Let me give you another insight. In these deep pockets of villages, while we talk about women empowerment, the land or the business is owned by the father or the father-in-law. The house or the tractors and all the other goods are owned by the son and the son-in-law. All that the lady has in her hand is perhaps the key to a small Godrej safe where she keeps some gold jewelry. Here I'm empowering the lady because 95% of my customer base are ladies. Here I'm empowering the lady that come and stand tall and start contributing to your family. Through an asset class which is simple, easy, you also can take financial decisions on behalf of the family. So yes, to that extent, I'm a bank, but with the power in hands of the consumer.
Very well answered. Thank you.
I think with that, Vikas and other panelists, we are coming to an end to our roundtable discussion. It was wonderful to have you on the board, and I'm pretty sure the audience also picked some of your golden nuggets in terms of what is it, either in terms of product innovation or in terms of the target segment or in terms of the communication or in terms of building channel network for the savings and investment for the Bharat segment. As I mentioned in my beginning of my context setting, I always feel that in the financial inclusion space, when we talk, savings and investment should come on the front very soon, and we have all the building blocks. It's just a matter of days. It's just a matter of years, if not decade. Then we will be providing significant use cases to the last underserved segment of the Indian society. And not only just India, 22% of world youth population have ever saved in a formal financial instrument. So there is also a possibility of building something in India and maybe perhaps exporting to outside world, other emerging market as well. So with that positive note, I would like to thank each one of you for participating in this. And if any participant has any question, they can write to us, and we'll be ensuring that it reaches to the concerned panelist on board. Thanks a lot. Thanks a lot for joining today.